Hey, good morning everybody. This is Randy McMullen with Amstar Mortgage. I've been getting a lot of emails, phone calls, and text messages about what is going on with the Fed funds rate. We hear that they're going to cut the Fed funds rate to 0. And is that going to lower mortgage rates to 1% or to 0? Well, mortgage rates and the Fed funds rates are two very different things. The Fed funds rate is kind of like an overnight rate. That's the rate that the Feds loan money to other banks and institutions for short-term, overnight, 1, 2, 3 day types of loans, very, very short-term. Mortgage rates, on the other hand, they're on the other end. They're at 15, 20, and 30 years, so very different term, and they're affected by very different things. So here's what happened. The Feds did a 0.5% Fed funds rate cut in an emergency meeting about 10 days ago. Did mortgage rates fall? In fact, no, they didn't. Mortgage rates went up 1% last week, and direct opposite of what happened with the Fed funds rate. So there's a very big disconnect there. Most people expected that rates would fall because the stock market was falling, and normally when stocks fall, rates also fall, but they didn't. So it's a very unusual week. So the other thing is now the Feds came out yesterday and said they're going to cut the Fed funds rate all the way down to 0. But let's talk about who that's supposed to help. If you're going to inject $1.5 trillion into the market, which they did last Friday, and you're going to lower the Fed funds rate down to 0, small businesses that may be in difficult times, or if they have to close their shops for 2 to 6 to 8 weeks due to the coronavirus, are going to be in a little bit of a struggling position. So the Feds wanted to make it very easy. They wanted to put a lot of liquidity into the market so that when businesses need to borrow money, they could borrow it and get it inexpensively. And that's a great lifeline for small businesses. But what about consumers who want to refinance? So let me tell you what they did do, which is going to help rates for the foreseeable future. The Feds are going to purchase $200 billion of mortgage-backed securities in the coming months. In other words, what they're doing is they're going to go to the market and they're going to force rates down by going in and buying just billions of dollars of mortgage-backed securities. On top of that, they're going to do what I call rollover purchases. So as refinances from previous years fall off the books, they're going to take that money and roll it back in and buy more mortgage-backed securities. So we expect that over the coming weeks, not because of the Fed funds rate cut, but because of the bond buying activity, the Feds are going to drive the mortgage rates back down. It won't happen all at once like the Fed funds rate does, but it will happen gradually over time. If you have any questions, please feel free to give me a call, shoot me an email. This is Randy McMullen at Amstar Loans. My email address is randy@amstarloans.com, 770-509-7827. Be careful out there and have a good day.